following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Let's send a little sun up to the northeast. Boston, this is a pretty amazing statistic, folks. So the Boston area has just got more snow this month than they did in February of 1978, which is just amazing. I just got a picture text to me from my daughter. She's looking out her second floor window looking down. It's pretty intense. So stay warm up there and stay safe up there. Let's take a look at one of this is a quote by Kobe Yamada. Believe in the magic of tomorrow and your spirits will be lifted on the wings of hope. Market wise, let's take a look at it out here. We have the Dow Industrials down 130, Nasdaq's off Nasdaq's off 23, S&Ps are down 15, gold contract up $7.20, trading at $1,241 an ounce. Silver up 35 cents at $17.04. Platinum down 4 at $1,219 an ounce. Copper flat at $2.57 a pound. Light sweet crude up $1.19, trading at $52.89 a barrel. Bonds, we have the 10-year down 3 ticks at 128.20. 30-year is flat at 147.21. And the King dollar down 239 ticks at 94.61. The euro is up 17 at 113, and the yen is down 71 at 118.41. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so what you have happening, folks, is that intraday here, what we just did inside the future market is that we just broke a B point of an ABC structure on the way down. You're at 2038 right now. That little baby can get down to 2022. I don't expect you're going to see that in the next 60 minutes, but you are breaking lower with expansion of volume. A to B equals C to D. You just broke the B point. You did it with volume. That's saying that 2022 is game. If we go take a look at the Dow Industrials, what you have inside the Dow Industrials, all the indices, by the way, folks, what we had is this. We take a look at the Dow first. What you had is that we've had a consolidation that's been going on since December 1st. The top of that consolidation in the Dow is 915, 12,915. Each and every time we're up to that level, doesn't have the volume, gives it up on price. Each and every time, can't bust it up. Now wants to try to bust it down again each and every time. And this is a wide consolidation because the top of that consolidation is at the 915 area. The bottom of that is at 067. So you're talking about basically an 875-point consolidation. Down at the bottom of that consolidation, that's where all the volume is. So that says you're building cars for lower price to bust through that area. We'll see whether it can bust through the area the next time it's down. We certainly got a bounce. Last week, we hit the 037, and 4 days later, you're at the top of the consolidation. We'll see how this shakes out right now. What we will need is that we'll need an expansion of volume as we're coming down. Thus far today, we do not have that expansion of volume. We take a look at the NASDAQ composite. What do you have with the composite? Composite, same setup in the composite. Composite, a little bit weaker. Bottom line consolidation has been in place, can't break the top. So now the composite's trading at 47.22, 45.47 is game. That's where that baby wants to run down to. Gold contract. What do we have with gold? Gold got hit hard last Friday. You come down with volume. What you did, however, is you came down with lighter volume than how we went up on January 15th. Now, what does that set up? That sets up, folks, You're going to be building cars in order to get back inside the larger range, inside the physical contract. And that would be, the larger range is 1252. Right now, you're at 1242. XAU and HUI, different ball game. What you had with the XAU and the HUI, they didn't break the swings. They had lighter volume. That little baby's still building cars, and that's really bullish for the equities. The HUI did the exact same type of setup, didn't get into the lowest swing point. The lowest swing point on the HUI is the 189.71 area. That little baby still staying at those highs. Now, bonds. What do we have with bonds? Okay, so check it out. 10-year bond got hit hard Friday. And the real key is going to be, bottom line, how is this test going to come in? The low of Friday, folks, in the 10-year is 128.15. We've hit 128.18. We'll see how that baby gets tested. That's still, it's down with an expansion of volume, lighter than going topside. But when you come down with this much volume, I want to see that baby get tested, meaning tested and rejected at 128.15. We go take a look at the 20-year plus using the TLT. And what the TLT is saying is that you're still going a higher price, the 20 plus. We had come down on Friday. We come down on 13.8 million shares versus 18. So that little baby has the expansion, but not even close enough to basically break the bond market down. 30-year bond. What do we have with the 30-year? 30-year bond also came off that high with some juice behind it. Bottom line, I expect the 30-year also is going to have to, first off, test that low of last Friday, which is 147.01, build some cars in order to get into higher price. King Dollar. Let's go take a look at King Dollar, because King Dollar is going to be the tricky one out here. So, King Dollar has been trading as it broke topside on January 21st. Been trading up here 2 weeks now. What we have with King Dollar had a huge expansion on price on Friday. Didn't have the juice behind it. This is what you had. You almost had juice, but you didn't. You did 48,000 contracts. We had come down on Tuesday with 58,000. Now what it did today, got to a higher high, has the lighter volume. The way that's set up is that now it's going to go after its swing low once again. And we'll see whether volume comes out of King Dollar at this 93.38 area. I expect you're going to see an expansion of volume as it starts moving to lower price once again. Our phone number is 877-927-6648. We take a look at some of the high-volume stocks in this low-volume market. You have Bank of America's down 12 cents. We got Verizon off 19. Transocean rig is up $1.93. Some of the Dow stocks out here. You have American Express down 15. Big Blue is off $1.18. Big Mac is off $1.16. Let's go over to Big Mac. Big Mac came out with numbers. Numbers just aren't there, and Big Mac's not going to be able to get out of her way. 5.2 million shares traded out here today. It's coming into 11.7 million. Big number. If we take a look at Big Mac, how this is set up, this is distribution in spades at highs. You can make the case that the Big Mac is still at its high. It's at 92 bucks. The high out there is 102. And it's going to be making its way down to this $64 area. I mean, it's a big number when we really take a look at it. Let's go to Rob in Paramus, New Jersey. Hey, Rob, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Yeah, it's not snowing.
Thank God.
I'm in
Listen,
Jersey.
it's pretty amazing what's happening in Boston. Boston, the suburbs,
they're getting killed.
They are just getting smoked.
Hey, I had a question about Ralph Lauren. I always have a question about stocks like this. After it goes down, it was hit, I guess, for earnings. Is this still a good short, or does it usually bounce after this time?
No, you want to see it bounce first. Let's take a look at it. Get Ralph Lauren hit a low out here today, 135. The high was a 187. This has absolutely got toasted and roasted. It broke apart last week. Last week it had closed on the 3rd at 172 and opened the next day at 139. So when we take this, we put this back a little, what you're going to see, and you know, there's always, it's just amazing. Yeah. Okay, so Ralph Lauren, I just put this up on a monthly basis, folks, a 10-year monthly basis, and what you're going to see is that the last time it had any volume on the way up was 141.71. That was in August of 2011, and it goes sideways. This was so dangerous. It goes sideways for almost 2 years. And the one place that sticks out like a sore thumb, guess what? It's not at the highs, folks. It's that when they sold it down in February of last year, not this year, last year. That was the warning sign. Okay, they sold it down from 192 into 146. It goes all the way back up to 187. Yeah, you want to wait for a bounce. And you'll get one, you know. I mean, and it should bounce, Rob. It's right into this August 2011 deal right now. It'll bounce somewhere. You got to wait for a bounce, though, man.
Okay, thanks very much.
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 131. You get the NASDAQ off 23. S&Ps are off 15. We're at the 2037 mark. And what you have here, folks, is that when we're just getting on the air, when the S&P did, future S&P, this is broke that swing point. You broke it with volume. So that ABC structure on the way down is 2022. One of the keys out here today will be, are we going to get volume behind this move? If we go over to the biotechs, we take a look at the IBB. What you're going to see inside the IBB, which affects the NASDAQ and the NDX 100 quite a bit, is that the IBB did just as the rest of the market had done on Friday. Tried to get to a higher high, couldn't handle it with price, gave it up on price and volume. The IBB on Friday got to 322. And we had volume out there of 1.9 million. Now, the thing that's amazing, I mean 1 million. 1 million, which is a joke. Because ABC structures on the way down or the way up are pretty cool dynamically. But when you see such a contraction of volume on an ABC down, in this case, is pretty intense. And what I mean specifically is that the IBB had made a high on 1.4 million shares. It then came off the high with 3 million shares and 3.1 million shares. Made a low. It made the low of 305.01. Bounces back, and the bounce back was so anemic, it was amazing. Bounced back with the 900,000 shares. Gave it up on Friday with 1 million. Now, the real key is going to be how do we come into the B point of this structure at 305.01. So we'll see how that baby shakes out. Today, we have 800,000. So the volume is not there today, just as it's not in any of these indices as we're coming into the close of this market. Still have plenty of time to get a little juice going, but I don't expect we're going to have some big numbers out here. We're going to take a look at the 3 Qs, the NDX 100. Excuse me, folks. NDX 100 set up the exact same way. And these channels that are set up, folks, are pretty clean. In fact, they've been the cleanest channels we've seen in a long time, meaning that it's been going sideways for a long time. So when you have a sideways move like this, that you can make a case that the beginning of the sideways move actually started on October 30th. October 3rd. October 31st. October 31st is where the market at the 3 Qs had gapped from 100.26 up to 101.75. So this is a higher level. You know, the bull could make the case, hey, this is a higher level. The bear would make the case that, yes, this is the higher level, but guess what? It can't break topside, and every time it comes back down to the actual breakout area from the 30th of October, you have monster volume. Same's applicable in the NDX 100. You know, we have at the NDX 100, all the volume is down at 99.96. The swing low that was generated out there on December 16th, as well as January 6th, as well as January 16th, and then as well as last February 2nd. So we'll see how we come back down to that level. But that's where this baby wants to go. The SPY, we take a look at the SPY, exact same setup inside the SPY. And the SPY, the volume is just as dramatic. At the highs, at the top of the consolidation and the SPY, you're talking, if we start with the first one up there on the 5th of December, you're dealing with 91 million shares. Then what do? You come down with 259 million. You go back topside again with 79 million. You come back down with 209 million. You go back topside with 158, you come back down with 192. Bottom line, that is building cause to go downtown. What we will see, we'll see at least a test of that, and we'll see what kind of power it has as it's coming into these lower numbers. We go take a look at the small caps, the IWM, same setup in the IWM. In fact, it's pretty wild going right across all these indices, how the setup and the channels have basically been laid out. Now, the IWM certainly has a higher consolidation. The IWM today, we're at 118.95. It couldn't handle the the higher swing points on Friday, has the exact same setup on the way into lower prices. When we take a look at the, let's see, May. When we take a look at, well, what's happening, you know, with all these indices, by the way, which we have been talking about, is the October 15th swing low is the big number out here, folks. That is the number that is not only large for how this market has traded out. It's a really large number, meaning we're still at highs big time compared to where October 15th is. Let's go to John in Winchester. Hey, John, what's going on? Okay, we lost him. We lost him in that snowstorm, but I know what he wants to look at. Sorry about that, John. Texas Instruments he's looking at. So Texas Instruments, semiconductor design manufacturer company. The low is 41. The high is 55. And let's see. When do they come out with numbers? So they are coming out with numbers April 22nd. Okay, so that means the numbers are already out. Now the question is, what does he want to do with it? Okay, so what I wouldn't do just yet, yeah, I wouldn't be going short this just yet. This is what you have. You're at a high-end consolidation, no doubt. Now, if you want to see how something is just a little bit different inside Texas Instruments, and that you don't have as much volume at the lows versus the highs, Texas Instruments would do it. And this is what it is. It looks like the same consolidation, and it is, okay? But that's just meaning on price, but it's a high-end consolidation. It does want to go down to $41.47, which is the October low. What you have, though, is this. When we were showing the rest of the consolidations, at the highs of the consolidation, you had light volume. And then at the lows of the consolidation, you had much heavier volume. You do not have that with Texas Instruments. So what is that doing, folks? It's saying nothing. That's what it's saying. I wouldn't be going long or short. But you really want to look at this so you can see the clarity inside something being not clear. And what this is saying is that you don't have that large volume spikes each and every time you're down at the bottom of the consolidation. You don't have them at the top. So what does that mean? It means nothing. It means that you stay away from it, okay? Because it's not generating the type of high probability, whether it's going up or down, that you want to be looking at when you want to be investing in something. So that's Texas Instruments. Let's go and we'll take a look at Intel. We'll bring up Intel just because it's in the same type of sector. And see what Intel's doing out here. Now, Intel already fell apart. You know, if we take a look at Intel, what you have with Intel came off the high of $37. You're down at 33 right now, and Intel is making its way back to the October 15th swing point. You know, the high of that swing point is $31.65. The low is $29.65. So, you know, you're already down, We're down $4, which is not a big amount. You're down $4. Guess what? Wants to get down another $3. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now off $104. You got the NASDAQ down 16. S&Ps are off 12.5. Gold's up $7. Silver's up 35 cents. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 120. Nasdaq's off 20. S&Ps are off 14.5. If we go overseas and we take a look at what's happening overseas, the FTSE down 0.2% today. DAX, came down 1.69. That sounds like a big number, but the reality is that with the DAX, you talk about on a run, the DAX had been on a straight line run from a price point of 9,200, 92 up to 10,600. So bottom line, how that backed off is not a large deal, really. The volume on it, I won't get that until a little bit later, but bottom line is that that would make sense that it could back off a bit. If we go over to King Dollar, folks, we look at our King Dollar, this is what you have happening with King Dollar. The real key is going to be how do we come into the low that was generated last week. Because what we have thus far is this. King Dollar goes topside big time on Friday. It had the price spread. You know, it's off just barely off its high. The high in King Dollar right now is 95.85. That high was generated out there on the 26th. And this is how subtle this baby is. It's how we came down on February 3rd. That's at 93.38. And, you know, if you're a fundamentalist, you can hear all the jabbering in a continual basis and the hypocrisy, actually, that you can really wrap your head around pretty quickly about a strong King Dollar versus a weak King Dollar. You know, the whole financial establishment, including the political establishment, was always saying that, the dollar's going to fall apart, you know, this and that, and debt structure. Everything is disgusting, so the dollar's been down. Well, guess what? Now that the dollar's up, all of a sudden it's the end of the world now that the dollar's up. Why? Because what does happen is that our large multinationals, as the dollar is higher, it cost a fortune and missed earnings. Not, it wouldn't be the gross, it'd be the earnings. It'd be what's coming to the bottom line. Then what you have, there was a op-ed article today by Larry Summers saying the Fed would be out of their mind to raise rates right now. You had Jack Welch out there saying the same thing. The bottom line is that it is the same. I see the Fed, someone or the Treasury Department, folks, is going to get in the middle of the dollar, and we'll see where this shakes out. You know, I'm not saying whether it's right or wrong, but that's what you're going to have. And that's what the foundation, where I'm coming from. This is what is really important to understand just in the texture of markets in general. The foundation itself, there's always going to be people yapping. And not most of the time, many times. In the dollar's case, it was hypocrisy big time. You know, if I've heard so many people saying that the economy's not going, it's absolutely blowing my mind when the stock market is up all of 200%. And people are out there still yapping that these policies didn't work. It's like, oh, really? So where are we supposed to be up? 8,000%? It's wild watching this whole thing shake out. That's what it comes down to. Because what I expect we're going to see now is that the amazing part about it is that King Dollar itself, the way that the market has been trading, for some reason, the market doesn't like a weaker King Dollar. So every time the King Dollar starts pulling back, like today we're back 160 ticks, big deal. That's nothing. Market likes to pull back. But it's going step for step. So it's like, okay, what the heck is that all about? And we don't know, but bottom line is that correlation is basically been out here for, you know, about 6 weeks right now. So we'll see where that shakes out. What we do have, there's the one dynamic that changed on Friday, and what that is this. I'm still bullish in the context that I think bonds still want to go higher, but it's something that you really want to keep your head wrapped around in a big way. Because what we did have, see, this is 10-year, this is good. What we did have is that the 10-year and the 30-year bond went down with volume. What we have out here now, today, is that we are testing that area. In fact, let's see if the 10-year just did it. Now, the 10-year, we're 2 ticks off testing it. The 10-year went to 128.17 today. It's 128.15. If you're a bull in the bond market, guess what? You'd like to see a test right now because the volume is anemic. We did 1.8 million contracts on Friday. Right now, we're only at 1 million. You get that test and you get that rejection, guess what? That's saying, hey, baby, they still want higher price. The TLT is giving you the best evidence thus far inside the bond market that we still want higher price. That broke the B point on a monthly basis of an ABC structure on the way up. It broke it with volume. When the TLT came back on Friday, we came back on 13.6 million shares. You got to a low of 130.59. That was going into 18.3 million shares. And that was going into the break topside from January 6th. So that level there is saying, hey, that TLT still wants higher price. We'll see how that ends up shaking out, but that's how that is set up. Over in the gold market, if you take a look at the GLD, what we do have out here, and this is tricky also, but the GLD is also saying physical gold wants higher price. Physical gold on Friday also came down hard, wide price spread, big volume, but not bigger than the break top side that was generated out here on January 15th. What the GLD did on Friday, GLD came down on 13 million shares, hit a low out there of 117.95, but yet that was going into 17.9 million shares. In that context, that's saying that, yes, the gold contract itself is going to have to get some cars built in order to get into higher price and to stay in higher price. The way this market is set up right now, though, interest rates are still low in an extraordinary way. The 10-year, folks, is still running at 1.95. If we go overseas, what you have, France, a 10-year is at 0.6%. Germany's at 0.3%. Italy's at 1.6%. Think of it there. Spain is at 1.5. It's amazing when you actually look at the rates around the world, and it's actually pretty amazing to me when I actually hear a analyst say that even with rates that low in Europe, that our rates are going to go up. It just doesn't make any sense. It's because when you look at it on a relative basis, our rates are actually high. They're real high too. So we'll see where this whole thing does shake out. You know, the Fed has been floating out there. Okay, well, we're just going to go up, 5 basis of 1 point, so people know that, okay, we are going to start raising rates. Well, rates have not gone up, folks, on a trend line since 1981. So it's going to be pretty amazing. And how far can they go down? Well, guess what? The 10-year can go down 1.9%. That's what you look at. In fact, if we look at some of the bonds, whether it's Germany, whether it's Italy, whether it's France, when they were at 1.9%, it didn't look like they could go down either. Well, guess what? They went down, And that's when you get the world awash with money. But that's that whole European deal, the Greece deal, and the Ukraine deal, folks, that's still on the tables out here. It's on the tables in spades, too. And what you will see, the downside moves in this market will still be the ones that come out of nowhere. And it's like, okay, how is this happening? Dow Industrials right now are down 75. You get the NASDAQ off 11. Inside let's go over and take a look at Big Blue. Big Blue has been basically hanging at these lows out here for quite a while. If we take a look at Big Blue, McDonald's is getting hit out here today, but if we take a look at Big Blue, which has a large effect, no doubt, on the Dow Industrials, Big Blue hasn't been able to get over its downdraft, the initial downdraft of 161 from October 21st. That initial downdraft, when it gapped away at 181. 3 days later, it was at 161, monster volume. And what Big Blue has done is that we made a low December 10th at 150.50. We came into 149.52 on the 29th of January. You have lower highs, you get lower lows. This is going to be just a mess. And Big Blue is spending a fortune buying back stock. But Big Blue is making its way down to this 116 area. And Big Blue at 116 is going to be a real problem for the Dow Industrials. The largest weighting stock right now inside the Dow Industrials, we're talking Visa. And Visa's been doing well, holding the Dow Industrials up at higher prices, and Visa looks pretty good. So Visa's trading out at 136, down 136 today. But Visa has volume all over the place. When we just broke topside even last week, it has volume. So we'll see what it wants to push this Dow into lower price. But thus far, Visa is one of them that's going to be pushing it up. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now are down 79. NASDAQ off 11. S&Ps are off 9.5. Gold's up 650. Silver's up about 34 cents. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are down 85. You get the NASDAQ off 11. S&Ps are off 9.5. And if we take a look at some of the volumes of how we're coming into this, if we start with the SPY, you take a look at the SPY. The SPY's done 74 million shares. You're gonna need an expansion of volume as we get into lower price. When we talk about an expansion of volume, folks, as we get down to the lower end of this consolidation, we're talking big expansion of volume. So we had hit a high on Friday with 125 million shares. The lows that we're talking 160 million shares, 200 million shares, 200 million shares. So as we make our way back into the bottom of this consolidation that we're in, that would be 197.86. That's the type of expansion that you'd be looking for. First day off of it, bottom line, you get light volume. If we take a look at the 3Qs, the correlation inside the 3Qs right now, 3Qs are backing down out here today with 21 million shares. That's also light volume. The bottoms of the 3Qs, when we take a look at this, put this on the daily for you for a second. When we take a look at the bottoms of the 3Qs, you're talking 65 million shares, 66 million, and at least over 45. And right now you're dealing with 21. The IWM, the small caps, what you have inside the small caps is that same type of setup that is out there. Small caps have done 24 million shares. The bottoms of those consolidations, you need an expansion to like 60 million shares. So we'll see how it starts approaching the bottom of that. I do expect what you will see, you're going to see an expansion of volume. Most times you're not going to see it the first day. What tends to happen is that the first turn, because you're still at highs, you get light. You start little momentum on the way down, you see an expansion of volume. If you get down to the lower end too quick, the volume will dry up beyond belief. That's how that just works. What you're going to need is you're going to need some cause in the middle of that right before the swing lows if, in fact, they want to break them. So we'll see where that does shake out. Inside the Dow Industrials out here today, putting strength into the Dow is Caterpillar, which is a dead cat bounce. Caterpillar's up $1.37. Chevron's up 89. That's a dead cat bounce. GE's up 9, and ExxonMobil's a dead cat bounce. So that's up 7. Taken away from it, you get Walmart down $1.44. Johnson & Johnson's down $1.39. You have Big Mac is down $1.23, and you get Travelers Insurance off $1.39. Travelers is it's still in a consolidation. Inside the NDX 100, what we have moving inside the NDX 100, you get Staples up 51 cents. That is the leader. That's taken over Office Depot. Viacom is up $1.23. What's going on with Viacom? Let's see what we have here. Yeah, that's a dead cat bounce. That's already down off $80, and you're dealing with $68 right now. NDX. Baidu.com is up $3.31, and Wynn Resorts is up $2.04. Now, taken away from the NDX 100, you have American Airlines off $1.61. American Airlines, by the way, keeps popping up, folks. There's some sellers in American Airlines. AMAT is down 69 cents. You get Alexa Pharmaceutical off $3.99, and you get AFCO Technologies down $2.36. Something that you do want to keep your head wrapped around is going to be that IBB, because the IBB certainly hasn't fallen apart yet. You're down all of $1 today, but what you have in the IBB today, which is kind of intriguing, is that this is really subtle. So check this out. The IBB today has done 927,000 shares. That's not a lot, but guess what? That's what we did as it was going up the last 2 days. So you get a sideways movement out here, slightly lower. This IBB is going to come into this lower swing point that was generated last week, and it looks to me like the IBB is an ABC structure on the way down. At 305.01, it would need more than 3.1 million shares, and then you get confirmed ABC structure on the way down. One of our tigers, Mitch in the den, wants to take a look at PAAS. And if we do take a look at this, we happen to own this in the gold report. This is Pan American Silver. The low is 869. The high is 1597. And the way this is set up is that this is a nice little consolidation that's set up. Let me pull this back. And it looks like you're building cars right now. We came off this low of $8.60. It goes from $8.60 to $11.65. You've been building cars, and we've been building that cars for a couple of weeks. What's impressive, and if you have metal equities, folks, what you want to be looking at is at what happened to them last Friday, because a few of them really held up well. This one in particular did. This only backed down with 1.9 million shares. It was going into 2.9 million. That is still building cars and looks like an ABC structure on the way up, and it's a decent one, too. Your A point on this is 869. Your B point up is 1195. So you're talking about, what? Yeah, $3. Your C point is 1085, so you're dealing with 1385. That's where this baby looks like it wants to go, which would be set up, by the way, because what you do have is that when you take a look at this, what you're going to see is that when this came down, when we came down on September 4th, that stock had gone from 1430 down to 1341 pretty quickly. We're up in that area right now, and what's always neat about when you do break topside, which this has, is that 1431, it had gone straight down 1431 to 961. Well, when you get above that, which we are right now, it can go topside just as quick. Why? Because you don't have any congestion in the way as you're getting up into those levels. At this point, most of the gold and silver equities continue to line up really well. And the differential in this lineup versus other downdrafts in the marketplace is substantial, meaning that as the market has got hit, these gold and silver equities haven't got hit. They've got hit a few times with some wide price spread, but you're talking the ones that got hit with wide price spread, like we own this in Eagle. If you look at that, when Eagle, it would make sense. It just went from 23 to 34, backs down, but even when it backed down, it still backed down to its breakout area with lighter volume. Now, when you get that phenomenon, there's no doubt you're going to build some more cars. You know, it's up 50 cents today. You're going to build some cars, but that flat out was our big move, period. You know, when you take a look percentage-wise, you know, we went 50% off the low. Now you're going to build some cars for higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with some numbers after the close out here today. Dow Industrials right now down 93. You get the NASDAQ off 16. S&Ps are off 14. Gold's up 630. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom, a great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. And let's make it a great night. And stay safe up in that whole northeast area, folks. That snow is brutal, no doubt. Gonna send you some sun up there, baby. This quote is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Words are important, folks. Make sure the right ones come out of your mouth. Market-wise, let's take a look at it out here. Dow Industrial's down 95, Nasdaq off 18, S&P's off 13. Gold contract up $6.10, traded at $1,240 an ounce. Silver up 32 cents at $17.01. Platinum down $5 at $1,218 an ounce. Copper's flat at $2.58 a pound. Light sweet crude up $1.18, trading out at $52.87 a barrel. Bonds, we had the 10-year down 6 ticks, 128.17. 30-year off 7 ticks at 147.14. King dollar down 171 ticks at 94.68. The euro is up 11 at 113, and the yen is down 52 at 118.60. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're going to start with the SPY, folks. So, last Friday, they couldn't bust it up. Gets to the top of the consolidation, gives it up on price, gives it up on volume. Bottom line, what does that mean? That means that now the market wants to go after the lower swing points inside the SPY. Right now we're trading at 204.63. The bottom of that consolidation is 197.86. We've been in this consolidation, folks, going all the way back to October 30th. Each and every time you get to the top of the consolidation, the market has given it up on price with lighter volume. Each and every time we're down to the bottom of the consolidation, we've had heavier volume. Now, what we have had is this. The first low that was established December 16th, we had 259 million shares. Next low that was established on the 15th of January was 176 million shares. The low that was established last week was 163 million. So you can see those correlations. First low, 259. Next low, 150. No, next low, 211. And then the next low, which was 163. The correlations at the top are light beyond belief. The first high that was generated up there was 91 million. Second high was 79 million. Third high was 158 million. That wasn't bad. Fourth high was 117, and the high from Friday was 125. So how we come down to these lows again, I'm going to say, okay, is it going to break down and go after that October 15th swing low? That's the longer term place this S&P wants to go right now. And that's a long way down, by the way, because if you take a look at the cash S&P, what you're dealing with is that the cash S&P right now is at 2047, and that number is 1820 at the lows. So that no doubt is a big number. If you take a look at the 3Qs, it's the same type of setup inside the 3Qs. And by the way, what we did do today is that we came down with light volume. So as we're coming into the bottom of this consolidation, you'd have to see, okay, the bearish case would be you have an expansion of volume once again. The bullish case, if you're a bull out there, would be you come down to the bottom of that consolidation, you reject lower price, and volume does not come out of the ETF structures or the equities. Thus far, the Qs, same setup. The high volume lows out there. Right now, the Qs were trading 102.78. The lower end of that is 99.92. The small caps, same type of setup in the small caps. If we use the IWM inside the small caps, what you're going to see is that the IWM closed at 118.86 today. Now, the small caps is interesting. The small caps had a small expansion of volume. Not huge, but you're at 30 million. So the small caps are actually showing that they're weaker than, or there was more selling in the small caps than there was in the S&Ps and the NASDAQ 100, the 3Qs. The small caps, same setup, though, at the lower end of that consolidation. First swing low December 16th, you're dealing with 62 million shares. Your next swing low, you're dealing with 41 million shares. The swing low from February 2nd, you're dealing with 44 million. So you can see all the juice, folks, is down at the lower end of the consolidation. And what that says is that we're going to go after that lower end. We'll see, in fact, if we break that lower end. Gold contract. What do we have with gold? What we have with gold is this. Gold came down with volume on Friday. However, what it didn't do is it didn't break where we went topside from. And that was the that was the January 15th swing. The low of that swing was 12.27. Gold on Friday got to 12.34. No, 12.28.20. What does that mean? That means that we're going to have to build some cars in order to get to higher price inside the gold market once again. King dollar. King dollar is the number out here. What you have with King dollar is that King dollar did get to a high on Friday. You had the price spread. What you didn't, however, have is the volume. What we did with King dollar today is you got to a higher high with King dollar. We got to 95.03. We closed at 94.60. King dollar came down when it did came down last week. It came down with some power on February 3rd. We got to 93.38, and that was the first day that volume actually came out of King dollar on the way down. So that'll get tested, number one. If, in fact, this is a high in King dollar, and I think it is, what you'll see, what you had happen today is this. You went to a higher high, couldn't handle higher price, and didn't have the volume. So now, just as the indices want to go to the bottom, this is a much smaller consolidation. This wants to go to the bottom of that level, which is 93.38. If you get an expansion of volume again, guess what? That would be a pullback, number one, and we'll see what type of expansion of volume we got. If you got a large expansion of volume, that could set up with another follow-through day is volume off the highs, and that would get you lower price. The oil market. Let's go take a look at see what we got in the oil market. What you have inside this oil market, of course, is that today you had oil up 2.3%. That move, by the way, isn't CLJ5. So when we take a look at that move in itself is anemic compared to how we have come downtown. You know, oil was a one-way spin. And that one-way spin the last 6 months was $93 down to $44. What we do have out here, oil trades month by month, folks, meaning that you have plenty of new contracts all the time. Right now, we're trading the J contract. What we have out here is that the high that was generated last week of 55.05, I suspect will get tested. It looks like more like we'll see that probably get tested tomorrow. That's going to be crucial to understand. Can it get over those levels? And we'll find out. Today you had some decent volume in this contract. We did, let's see. Yeah, you did 208,000 contracts. That's not bad. So it's going to go after this 55.05. I expect you'll see that going after it tomorrow morning. We'll see whether we get any juice behind the move. If you go inside the oil and gas service stocks, the XLE, folks, it looks to me that the dead cat bounce is over. This is a classic, too. XLE, what we did out here today, you got to $80.82. You did 20 million shares, and it gave it up in price. That was coming into, folks, 47 million shares. And it closed underneath it. We had done 47 million shares on the 3rd. We got to a price point of 80.40. We did 80.82 today. You get over it with half the amount of volume. You closed underneath it, and what does it set up? Same baby. This distribution that's been going on is amazing. It's particularly amazing because you don't get to see large channels many times in the marketplace. In the Dow, the S&P, the small caps, the NASDAQ, we have beautiful channels that are set up since December. And in the XLE, we have a beautiful channel that's set up since October 15th. You know, when we talk about the October 15th swing low that the market wants to go after, the XLE had broken that going all the way back on December 1st. So that in itself, folks, is a big heads up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials finished down 95. NASDAQ off 18. S&P's off 10.5. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at Transocean, folks. Okay, so what we had out here, that's RIG, R-I-G. And so rig out here today, what does it do? Okay, you have some juice into rig, goes topside with some decent volume. We did 20 million shares today. Now this is an equity that had gone straight down in the last 6 months from $39 to $15. That's just the last 6 months. We take a look at what this equity has actually done. It's gone down from $160 to $20. Now that being said, I want to show you something because this is really cool just watching how this whole thing's going to shake out. So rig has volume today of 20 million. It takes out this little swing point that had 22 million. When this thing dropped out of bed, well, the last time it dropped out of bed, it's done it many times, it started, ICE is set up here at about the, you have ICE that's set up at November 26th. The top of that is $24.72. The bottom there is about $23. That, I expect you're going to see a bounce coming into. As we came down there, folks, we came down with 24 million shares. So when you're looking at this, I expect that, yeah, that's certainly can be a nice dead cat bounce. That being said, what I want to show you, and this is where it's important to really understand what gets pushed out in the press also. And so with rig, Transocean, I'll just read you some of the headlines that are running around with rig. Well, these are real, okay, but let me read them to you. Transocean rose the most in 7 weeks after BlackRock raised its stake and the owner of the largest fleet of offshore drilling rigs. Transocean climbed as much as 12%, the biggest intraday gain since December 17th. The shares were up 10% to 20.44 as of 4 p.m. today. BlackRock was the third largest holder of the Switzerland-based Transocean with a 6.8% of the outstanding shares as of January 16th, according to Bloomberg data. Now, I want to show you something, okay, because this is where it really gets cool as to the aspect of reporting versus what has actually happened. And when I heard this thing, I heard this earlier today, too, and I said to myself, well, this is going to be interesting. So I wanted to see, okay, so they own that much, right? Well, guess what, folks? You can own that much of something and be in a wicked losing position. Well, that's exactly what BlackRock is. BlackRock owns 6.8% of it. And you know what they bought, folks? They bought 1.4 million shares on the 16th. But you know what? They had owned, okay, 24 million shares. They are doubling, tripling. They're doing anything and everything they can on the way down. They're in such a losing position, it's like insane. Okay? So they got a bounce going because the way that the press went out there, they didn't say what they bought. They just said, hey, we own a 6.8% position. Well, guess what? They had already owned that position, folks. That was, they added the double down on the way down. So it's pretty intense. And then what they also did, I believe they put another, anyway, you get the gist of it. And what you can do, just so you understand, if you can go right out to Yahoo and find out, what happens is this. Once you own over 5% position, folks, is that if they buy or sell more, that night, they have to file so that it's immediate. That's what's so cool about this. If you happen to be looking at my screen right now, that's an immediate filing. And bottom line, someone had just picked it up. But that's important to understand. If we go over and we take a look at GoPro, GPRO, this little baby basically came down today with some juice behind the move. GoPro right now is trading at $44.48. It's down $2.64 today. GoPro, folks, is making its way back to the $24 area. It's going to be a total mind blower, but it's a monster ABC structure on the way down. When this broke down, it broke down in a big way. Let's go to Robert in Chicago. Hey, Robert, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
Yes, I am very much. Thank you. I was going to have you look at Mankind. That's MNKD.
Okay.
Thinking about going long it.
Okay, so Mankind, it's a biopharma company. They develop, commercialize therapeutic for diabetes, cancer, inflammatory problems. The low is $3.80. The high is $11.48. Right now, you're trading at $7.51. Okay, so it looks like... Okay, so she's down from 11.11. 11.11 was up there in June of 2014. This comes down with volume. No, I wouldn't be buying this. This is what you have here, Robert, okay? This is going straight into how this thing got basically taken apart August of 2014. We went up today with 12 million shares. She's going into 149 million on the way down.
Okay.
Yeah, it's a big problem. And, you know, dollar-wise, you know, it has a market cap of $3 billion. I bet they better have some good drugs that are coming on the marketplace, because they get a market cap of $3 billion and they take in 30 million. So,
they just got approved for you're able to, as a diabetic, instead of putting a needle in your arm.
Yes.
You're able to inhale it.
That's big. That's big. That should help.
It just got a FDA approval or last week or something like that. So I guess they plan on being able to sell this now, and it might actually be on sale in the United States.
Okay, so
news.
So let me show you something. I love that you know that, because it's really cool. And this is where, you know, it's funny. I just brought up the BlackRock deal, right? Of how their press release is coming out.
Right.
So if you're looking at my screen right now, I just brought up the insiders, right?
Right.
They're all selling.
Okay.
And it only sold. This one here, what I'm bringing up, the vice president, 149,833 shares. Let me see the rest of these. This is crazy when this happens, too. I know. I mean, so let's see. Another guy, another vice president sold 80,000. And they're selling them all, by the way. And pull the next one up. Oh, this is the same one. David Thompson. Yeah, I mean, you know, that's always a heads up, too, because now what happens, folks, is this, and Robert, there's no doubt that those were options, okay? And when I'm looking at that, it would say that, okay, listen, you sold 149,000 shares, and his exercise price on the first guy here, okay, the first woman, Diane Palomo, her exercise price was $1.69 to $2.41, 149,000, and they sold them at $7. Now, I can understand that. You probably can too. I mean, this is where sometimes, folks, you look at this and say, geez, you know, you're going to make $5. You know, they have a regular job. That's $500,000. So you can see it.
Yeah.
That's on one side, right? But on the other side, it's like, okay, hold it. If you think that you have something else that is coming in, it's like, why sell all of them? You know what I'm saying?
Fair enough.
Yeah.
That's right, Tom. Thanks so much.
Have a great one, man. Have a safe one. You stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials closed down 95. NASDAQ was off 18. S&Ps are off 9.5. And as we do each and every Monday at 35 past the second hour, we get our man, Mr. Chad Coco from TD Ameritrade Think or Swim. And folks, if you haven't test drove the Think or Swim platform yet, outstanding platform, come over to our website at TFNN. You're going to see the banner on the top and on the side. You can hit the banner, bring up the account. They'll let you trade with paper money. You'll see just how dynamic the platform is. I use it each and every trading day, whether I'm trading equities, futures, commodities, or currencies. It's all on one platform. It's tight. You can do some great strategies on it. And if you happen to be in the New York area, you can come up and see Chad and the whole TD Ameritrade team March 1st and 2nd. It's going to be at the Marriott Marquis. The Traders Expo is up there. We're actually going to be running around up there also on March 1st. That's a Sunday. So it's a Sunday and a Monday. That's Sunday night from 7:30 to 9:15. TD Ameritrade has a special event. I'm J.J. Kenahan is going to be teaching you some great strategies to look at in the commodity in the option market. Chad Coco, what's going on?
How's it going, Tom?
It's going great. So I know you. Yeah, it was great seeing you in Orlando.
Like what?
Yeah, and you get a little heat, but did you go back to Chicago and it's a little cold now, or what?
I am back in Chicago. Yeah, it was about 19 this morning, so kind of a rude awakening.
Yeah, no doubt. I mean, it's better than Boston, though. My daughter's up in Boston, and there's more. So check this out, folks. For you folks in Boston, you know this, but this is about as intense as it gets. There's more snow in Boston. I got to read. There's more snow in Boston. Okay, so at midday, Logan Airport received 69.2 inches, the most ever in 30 days. And that's bigger than the February 7th storm that ended in 1978. Hey, Chad, just to you can understand something, this is sick. In 78, right, when we got that storm, people were walking out, including me, walking out our second floor of a three-story house, walking out the second floor
Onto the snow.
Onto the snow. Isn't that crazy? I know.
That's nuts.
It is. It is. So, talk to me. We're in February now, or we're coming into. We got a lot of earnings happening.
Yeah, wrapping up the end of the Q4 earnings for most of the companies. So, not much today, but we have a couple more. At least out the S&P 500 the rest of the week. And
Yes.
I think that's about it for earnings season.
Yeah, and you know what's intriguing is that I was looking. It actually, I knew the option business was getting big, but man, they came out with a statistic last week that it's grown by like what 500 or 600% in the last 10 years, huh?
Yeah, it's massive. So I was just looking at our numbers for the day. We're doing 3 times as many options trades as we are doing equity trades.
Yeah, no, and you can see it because of when you look at the price spreads now. I mean, everyone, I think most people understand that the spread in a stock of going in and out is basically important to understand. And when you're talking even talking the Qs, when you talk penny wide, that you can go in and out of an option and it's trading at whether it's 1 penny or 3 pennies of the bid and spread, it's pretty amazing.
Yeah, really tight.
Yeah. When we look at those expected moves, so the expected moves that we had with all these earnings coming out, were there any anomalies inside of those that you remember?
Not that I really saw. Most of them were pretty close to what they were. The only ones I saw, I can't remember what company it was, but the earnings came out, it hit their expected move, but then there was a conference call about an hour after the earnings, and then it tanked from there. I can't remember which company that was offhand.
Okay, yeah, I should remember that too, because I remember that now. But yeah, what has happened, folks, after the close versus what has happened in general, it can get pretty dicey because Google was one of them, right? Google was trading down $15, then went up to $5.39, now it's back to $5.27. So that was a wild ride.
Definitely are. But the change in the volatility in that gives you some play if you're selling some premium there, though. So even with the big moves, you can still be wrong and still be right.
Sure. So what are we going to be talking about tomorrow?
Tomorrow I'm going to be going over, I had some questions come in through email about volatility and volatility skews, so we're going to touch on that. I'm also going to get into some time spreads, like calendar and diagonal spreads.
Nice. Listen, folks, the program is every Tuesday right here at TFNN, 12 to 1 Eastern Standard Time. Outstanding program. Now, you can get all the programming, folks, right on your cell phone, TFNN.mobi. That gets you the full audio. If you want to get the video, and he has great charts up as he's bringing through these strategies for you, just go to TFNN.com on your phone. You'll see the camera on the top right-hand side. Hit that camera. You get the audio as well as the video. You can test drive the platform. It's an outstanding platform, folks. Just come over to our website. Hit it, bring it up. You have nothing to lose and everything to gain. Over the course of the years, it's amazing looking out that you actually can hit a couple buttons. And first, folks, I don't want you to understand the strategies, but it's pretty amazing that you actually can do sophisticated option trades with a couple clicks of a button these days.
Definitely is.
Yeah, unreal. Well, listen, man, you have a great night, safe night, stay warm, and we look for the program tomorrow. I look forward to seeing you in New York, man. It's going to be March 1st and 2nd. It should be pretty nice out.
Hopefully.
Yeah, hopefully, exactly. I know. Okay, man. Have a great one. Take care. Bye-bye. If we go over and we take a look at, wait to hear this news, folks. This is pretty amazing. Qualcomm. Sometimes these companies have so much money, it just blows my mind. It's like Qualcomm just announced after the close out here. So Qualcomm closed at $67.11. It's trading out at $68 right now. Qualcomm has come down pretty hard. Qualcomm they just settled a dispute in China, and this dispute was about their mobile phone technology and having basically a monopoly. They're going to pay the Chinese regulators $975 million. Yeah, $975 million. You know what blows my mind? Like, how does this work? We need a business like this, folks, okay, that you can actually pay a fine of $1 billion and still be in business. If we take a look at what Qualcomm has done from highs to lows, bottom line is that, it's got hit, and it's got hit pretty hard. Qualcomm has gone from a price point of, let's see, we hit a high out here of 81, you're at 67. It has monster volume on the way down. The way this is set up is it's making its way back to 56. And we'll see, put this on a monthly, you're going to see where this thing wants to get into. 1999, oh man, this is a trip. Yeah, I got to bring this back further. You know what just happened is that I brought this all the way back, and I brought it back so far that 1999 came up. Wow. Oh man, you got to see this. This is sick. I wish I picked this up earlier. So check this out, folks. Qualcomm in 1999 hit $98. But if you want to see something that got up to close to those highs again with absolutely no volume, they just gave it up. This is it. When we hit the high, it was up here for 5 months too. We were hitting highs with 211 million shares versus the supply line had billions of shares. 1 billion shares in December, 1 billion shares in January, 680 million shares in February, 700 million in March. That destroyed the stock. Now, what we've done is that we've come off these highs and we'll go back into its lower range, which is $56. The amazing part, no doubt, is though, how can you pay? Well, they did it. That's the bottom line. Bottom line is that you talk about a big number, though, just about $1 billion. If you're watching Tiger TV, you'll see on this chart, it's pretty dramatic how it hit it, gave it up, and you know how this deal works, folks. Can't bust them up. What's going to happen? Wants to bust them down. That's the way this thing shakes out. In fact, let me just see something else just come across the tape on Qualcomm. QCLN. Qualcomm boasts the lower end of its, Qualcomm boasts the lower end of its fiscal 2015 earnings view. Qualcomm sees fiscal 2015 485 to 505. It had seen 475 to 505, the estimate. I don't believe it's still doing anything to its stock. No, still doing nothing to its stock. They'll just try to get anything and everything to get that baby up. But that is pretty amazing that it can come down that hard. Greece, in the news out here with Greece, Greece is going to be out here for quite a while, folks. And what I expect you're going to see is that the fight is going to be on, and Greece wants to basically get some more bread and go on their own. Greece is going to seek tomorrow morning $11.3 billion in short-term financing as it tries to stave off its funding crunch. He's going to present Wednesday morning. This is going to be presented Wednesday morning to the finance ministers in Brussels. If they get this money, folks, this money is just going to basically be a paper transaction to basically pay off some banks for a while on that interest. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow finished down 95. NASDAQ off 18. S&P's off 10. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Aeropostale, ARO. After the closeout here, Aeropostale, this little baby has been a stock that has no doubt got smoked. It closed at $2.64. It's trading at $3.30 right now. This is a teen clother. Bottom line is that this stock has been down since $32. So it's a big number on the way down. What you do have after the closeout here, they are saying that they see fourth quarter loss now 1 cent to 6 cents versus the prior 25 to 31 cents. So it's great for the company. That's the bottom line. I wouldn't be buying the stock, but that's quite a turnaround that they saw that they were going to lose 25 to 31 cents prior, and now they're looking from 1 to 6 cents. Their fourth quarter revenue, their estimate was $579 million. Now they're pushing $594. Their comp sales, they had thought they were going to be down 15%. They're down 9%. Bottom line is that they're no doubt lower price. Now, coupons.com. Oh, man, this thing is getting absolutely toasted. COUP. We take a look at COUP. So coupons.com, it's the operates a platform. Bottom line has mobile coupons, apparel coupons, all of the above. The low is $11.61. The high is $33. Now, this equity, folks, only went public in March of this year. It went public in March of this year, and bottom line, it went public at $16. This is just getting absolutely toasted. It's down at $9.97 right now, and let's see what they have to say. So they see the estimate for coupons.com was $66 million. This is revenue estimate. That now what they're looking at is $52 to $54 million. This is even sicker. They're going to buy back 50 million shares. Big deal. This company's going out of business. Authorize a buyback of up to 50 million shares. Their fourth quarter loss is 2 cents. They expected to make 2 cents. Instead, they're going to lose 2 cents. Now, if we take a look at this equity, the way it's set up, what you're going to see is that it is blowing by everything on the way down. Let me pull this back. This is an equity that can go out of business. The low thus far was $11.61. And if we take a look at this, your A point on this is $32. That with $32 was established in June. The B point is 11. So you're talking about a 22 A to B. Yeah, you're out of business on this. Okay, so check this out. So the C point on this is $20. And it's a $22 ABC structure on the way down. Now, I will watch to see how this shakes out, folks, but we've seen this phenomena before. The first time that I actually ever saw it, in the 90s, it was like, man, is this company really going to go out of business? Well, when you look at coupons.com, they can go out of business, number one. And if they're crazy enough to buy their stock back or authorize a buyback of $50 million, they're dreaming. So watch this. Just so you can understand how much they're dreaming too. Their gross revenue is only $50 million a quarter. They were projecting $66 million. They just told us it's only $50 million. So imagine that they're trying to have the public believe that they are going to buy back 50 million in shares, and they only take in 50 million revenue, not basically making it to the bottom line. So I suspect what you're going to see is that we're going to hear more about coupons.com, and that's going to be going out of business. Chipotle, CMG. What do we have with Chipotle? Chipotle, high-flying stock. Came off the high last week of 720. It's at 648 right now. And when they take them down, they take them down south. But you want to wrap your head around this little baby. What we have when we're looking at this is that it's making its way into the December low. And we'll see. Oh, this is huge. Okay, so if we take Chipotle and you put this on a weekly, these people got some competition now, evidently. Well, you know what? I mean, this is a law of large numbers, too. I mean, the stock's been up in a phenomenal run. We came off the highs last week, folks, with 6 million shares. That's after making a high with 3.2 million. what that did, that's volume off the high, number one. You're at 648. 582 is the first number. 582 is that we'll see how it handles that 582. 582 is where it had broken topside in July of 2014. The volume there, however, is a lot lighter than what we're coming into, but it very well could stall when it gets down there. We're talking about 5.5 million. And that, we'll see what happens when you get down there. But Chipotle has some trouble on the way down, because what you definitely have there is that you have volume off the high. We go to the biotechs, REGN, Regeneron. You'll see that Regeneron, and this is a highly volatile biotech, folks, okay? This stock loves to trade $7 or $8 each and every day, up or down. Now, when you take a look at this, what you're going to see is that stock-wise, wasn't hit that bad, only down $7. That's nothing for a $400 stock. But what you're going to see is we had a big expansion of volume. We came down with 1 million shares. We had gone up last Thursday and Friday with 700,000. That being said, now watch this. We had light volume today on the pullback, folks. Okay, so to get to lower price, you're going to need heavier volume on the way down. This equity here comes down, but what does it do? It comes down with an expansion of volume. What is that telling you? That's telling you your probability is much higher that, number one, it's going to go into the December 23rd swing low of 383, and we'll see if the volume expands once again. That 383 swing low, down $16 from where we are, had 2.1 million shares. What's sticking out like a sore thumb inside this equity is the gap that's wide open at 326. The biotechs in general, folks, okay, look that they've rolled, and we'll see if, in fact, they can get the volume going to the downward side. They did not have the volume on the way down today. Regeneron did, okay? But when we look at the slew of the rest of them, they didn't have the volume on the way down. The IBB itself was light volume. We'll see how it basically gets into that lower swing point. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.